What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is February 28th of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to talk about the three main altcoins I'm going to be watching going in to March of 2024. As Bitcoin is on a continued tear here to new relative highs, right under the big even level of $60,000, the highest level since November 2021, and considering that dominance is as high as it is right now, and likely getting towards a narrative top, I want to go ahead and spend some time to focus in on altcoins and the plays that could win out big in a potential altcoin cycle. So we've got a lot to unpack here in today's video. If you happen to enjoy it, consider dropping a like, and let's go ahead and kick things off. So I want to again take us back to what we've talked about here for the past couple of months, and that's focusing in on strong narratives. As Bitcoin is likely going to start cooling down here soon, I think that we're going to be shifting our focus a bit from Bitcoin infrastructure, which definitely could still benefit during this period of time, towards other plays and sectors in the altcoin space that are a bit more speculative and maybe a bit separate from the Bitcoin narrative. I'm talking about things like DePin, or decentralized physical infrastructure networks. I'm talking about meme coins. I'm talking about alternative L1 and L2 networks out there that could really steal the thunder from Ethereum and from all the other plays that already exist in the market that are really well known. I'm looking for a lot of small and mid cap plays in the market. I'm looking for those high velocity, high return kind of plays. One of those plays that I think meets into the DePin narrative is a project called Storage. Now, Storage is not something entirely new here. Storage is a really kind of well-established, kind of small mid-cap project in the DePin space that's mainly focused around storage. But one of the big elements that I think it plays into is the narrative on AI. And not just broadly into DePin, but really servicing one of the core issues beyond GPU power that large language models, or AI models, depend on. And that is storing all of that data, storing all of the data that is tapped into these large language models in order for them to operate efficiently. And whether that's for traditional LLMs or a lot of the new types of cryptocurrency projects that are going to be depending on LLMs and maybe utilizing things in a more decentralized and trustless fashion, storage, I think, is going to have to be one of those projects that is going to take a lot of that market share. It is one of the most established in its market, and the great thing about it here is that we have a lot of price action to work with, but outside of this, well, valuation-wise, I think it's relatively cheap here. To understand here where storage comes into things, it not only has a functioning business here with providing a sense of decentralized storage for a whole range of different companies and individuals across the world, but they also can serve as providing data storage for large language models in order to service various different types of generative AI models. So again, this is, I think, a huge part of the DePin story here. It's not just an issue of GPUs, it's an issue of storage and other infrastructure as well. But I want to go ahead and talk a little bit here about price action, because the thing for me here when it comes to storage as a network, look, beyond the fundamentals, beyond, asking whether or not this project is better than the other, I like to look at price action. And what I see here is a very similar layout to what happened back here in 2020 to 2021. You had an initial breakout here from the pandemic lows back in March of 2020, a rally here from around 6 cents all the way up towards around 65 to 70 cents, a solid pullback here, a nice higher base foundation, and then a move higher, spring higher from around 30 cents all the way up to actually around $4 at the relative highs. So this is, again, a huge move here. And it's one of many altcoins that, again, made that kind of move during that period of time, but definitely this outpaced a lot of the altcoins during that period of time. The other big thing here that I love seeing is a nice technical build-up here that is very similar to the past. We had the initial rally here from 20 cents to $1.20, nice pullback here to 52 cents, and this multi-week build-up, similar to what we saw back in January 2021, this kind of coiling in before the bigger move comes. And I think that there is definitely the opportunity at a minimum to come up here towards this prior resistance range, because DePin back in the day really wasn't anywhere near the kind of narrative it is today, right? Depending on the capacity for the altcoin market, that's a broader question. Like, how high can we really go? Can we really go on and break to new all-time highs and just see this thing go on a tear versus where it was in the past? I don't know. I think that's a more broader question of the altcoin market and the kind of velocity and momentum we'll see. But I do think that there's a very good chance you come back up to this range and potentially set in a slightly higher level. Not to mention, if you look at it on the BTC pair, we're not only at a nice discount here, but along with that as well, this is generally the range where you want to start to get optimistic on storage. And it has made some sizable moves here against Bitcoin. If you just scan through the chart, some very short-term multi-week moves here where you're able to make 200%, 300%, 500% returns, if not more, against BTC when it comes to holding storage. So I like finding these kind of plays here that give very consistent setups or ratios and can make very quick moves in an optimistic period of time. Not to mention, a lot of these came during periods of time where there wasn't an altcoin cycle. So that to me is even more exciting here, that maybe we don't get our altcoin cycle just yet in the month of March, but at a minimum, at least the chart showcase us here that there can be these types of moves. We just made a 263% move from August to January, towards the end of December. So I think that there's a very good chance here, whether it takes a little bit longer, or if it's just going to be here in the month of March. We've had some really short moves. Irrespective, I think it's high time to start focusing in on storage and some other DePin plays out there. And if you think about it, Render Network, which is one that we're also going to be talking about today, well, I think Render's got some really great confidence factors. One thing that storage has going for it is it's 1/10 of the market cap of Render. So just keep that in mind there. The market to scale potential is much greater, in my opinion, in the short term at a minimum, when it comes to these two plays when comparing them. But at the same time, Render might be more the long-term winner as it is more focused on GPUs. We'll have to see how things play out here. But again, I think in the near term, this is one of my fair plays. And we built a position on it recently within the Dash report. It's one of our trades. If you guys want to figure out, for example, how much I'm percentage allocated, when I get in, when I get out of trades, you guys can always check out the Dash report down below in the description. It's our newsletter here on the channel. But I want to also let you guys know generally where I'm watching things and overall what plays I'm excited about as well, so you guys aren't completely out of the loop on that. Outside of that as well, I want to talk about the next project here, which is energy. Now, I again here am focused on small mid-cap plays in the market right now. I don't believe into buying a lot of the kind of generic alternative L1s out there in the market. While I do like ones that are showcasing strong price action, no doubt about that, I can't find many that are keeping up with the kind of returns that energy's been bringing in recently. Now, energy is a project we've covered for a long period of time. And for a lot of years, energy was kind of building behind the scenes on focusing on security. This is, again, not only one of the biggest issues in crypto, but beyond that as well is one of the most unaddressed issues in crypto. You talk about constant exchange exploits, constant smart contract hacks. Not your keys, not your coin is the common response to people. And unfortunately, that's not going to allow us to get the next wave of users into crypto. If I want to go out and build an innovative DeFi protocol, if I want to, for example, test out new applications out there that might be offering airdrops as they're trying to kind of farm and get new user traction for their new idea and novel concept for a DeFi app, I've got to be able to know as a user that I'm going to be safe, because if I'm interacting with the wrong contract, if I deposit my funds in a faulty smart contract, it could be that the creator is malicious or not. That is going to be an issue for the next wave of users. And it's been the biggest reason why DeFi has been stagnant, especially while innovation in DeFi has slowed down. Energy has a built-in system known as defense in depth. We've talked about this on the channel before. We did an interview with Tommy not too long ago, so I definitely recommend you guys go check that out. But the main point here is that essentially defense in depth allows for multiple layers of security to prevent any hacker or any potential smart contract exploit or any type of thing from going wrong where funds would be stolen, sent to an exchange, and sold. In a similar fashion to how I might hack a smart contract on Ethereum because I find an exploit in the code, I send the Ethereum to an exchange, I sell it. There is little to no chance that you're getting all those funds back. At a minimum, maybe you're lucky if you get a little bit back if you get white hat hackers to help you. There have been billions of dollars lost this way. However, this just simply can't happen on the energy network, and here's why. Because if I were to, for example, be a hacker who found a bug in a smart contract on the energy network, similar to how I could have found a smart contract exploit on Ethereum or Optimism or Arbitrum or Binance Smart Chain, I may be able to exploit that contract in the short term and withdraw the energy to my wallet address. But if I want to actually send it to an exchange address, I'm going to have to go through an extended period of time before my transaction is confirmed, before my funds actually arrive to the exchange. In this case, if I want to withdraw to an exchange account versus sending funds to a friend or interacting with a DeFi app within the energy ecosystem, I'm going to have to wait an extended period of time. And this also allows for people to have on-chain notifications so that if they see a large sum of their funds being moved as users or LPs, then they can report to the Energy Bureau of Investigation, which has been able to deal with over 95% of exploits, both personal attacks and smart contract exploits on the network, in order to actually resolve them before it's too late. This is really exciting stuff here. So this basically means that essentially they can freeze the account from that hacker, that exploiter, and basically go through a remuneration process where those funds can be distributed back to the original holders. It allows for early stage innovation. It allows for people to essentially utilize applications, new novel applications, without having to worry about losing all of your funds. It's almost like a sandbox for new great concepts in the crypto space. And similar to Andre Cronje, who really kind of pioneered a lot of the DeFi movement in 2020, he had pioneered this idea of basically deploying into production because no one utilizes test nets. It's very difficult to get traction for new ideas when people aren't able to really kind of test around in the real market with real funds. So again, I think that this is really exciting here. And considering from a price action perspective here, the thing about Energy is that over the last year, it's made a really solid comeback. It got hit hard like a lot of coins back during the bear market. But what I really like seeing about Energy is it's providing some of the best returns at any of the L1 or L2s that I'm watching on my radar, and is keeping up and outpacing Bitcoin as well as Ethereum, which is definitely important if we're going to be betting on these plays over the next couple of months into an altcoin cycle. So definitely keep Energy on your radar, guys. I've been tracking it and talking about it here on this channel since back in 2018 because I knew Tommy was building on this behind the scenes, and I'm really excited to see them start to shine and start developing out their ecosystem even more beyond some of the applications they've already built, like GMI or Gonna Make It, which is their NFT platform, as well as Energy Swap, which functions very similar to Uniswap or other automated market makers. So again, beyond being scalable and everything, I think Energy's focus on security is really centerpiece. Now, I want to go ahead and talk at last about Render. Now, Render, of course, as you might have seen in the last video, or maybe seen in some of our previous videos, has definitely been one of the kind of larger mid-cap plays in the market that we've been talking a lot about. And we've been really kind of bullish on Render for quite some time. I mean, if I take it back here over the year, we've not only spoken about Render here since back, I think, in October and November when it was around $2.30, but we also talked very actively here when it was around $3.60 to $4, because we had estimated that this is going to continue to run higher here. Essentially, at the end of the day, DePin as a broader narrative is a big focal point for the crypto space. Render being at the forefront here, being the biggest market for providing decentralized GPU or graphics processing unit resources in order to satisfy the demand for generative AI, I think definitely puts it in a great position to continue higher. I don't know if it's the right time right now to go long, because if we look at the chart here, we are entering into a resistance band that's held since back in March of 2022. So this is a period of time where it might be good to be a bit cautious on building an entrance, but the way I see it is twofold. One, I would love to see a weekly close above this to signal that, hey, we're really ready to break to new highs versus where we were back in November 2021 against Bitcoin. And if not, if Bitcoin continues to hold strong and maybe Render in the broader altcoin market doesn't hold up too well, I would watch for this one on a 50% pullback, coming back down to that 200-day moving average and giving us an opportunity here to really get in at a favorable discount against Bitcoin, maybe in preparation for a later altcoin cycle. But again, at the end of the day here, the fundamentals here are strong, guys. There is a lot of demand for GPUs right now. There's a lot of unused GPU resources that can go towards this demand, or this kind of pent-up demand that's been building around AI and large language models. And I think that there's a really good opportunity here where there's a match, a beautiful match between technologies, where this opens up a decentralized permissionless network where people can contribute those resources for all kinds of things. And there's definitely other plays in this market as well, some smaller plays in the market, but it doesn't always mean that you should chase the small caps. While we've got some we're keeping on our radar here that we feel are good value plays, we also like trend strength. We like seeing this kind of build up here in momentum, and so long as that can continue to hold, I like to see it. Now again, we're going to have to see here how that plays out. So either watch for it on a discount, perhaps towards the later part of March or early April, or if we get a breakout here, it could be new high time here where essentially Render continues to bring it to higher levels. So these are three core projects that I've got on my radar, and I just want to let you guys know, if you guys don't see your altcoin on this list or one of the ones that you're really bullish about, it's totally fine. I definitely would love if you guys want to leave some comments down below about some projects that you're watching. At least tell me though why you're bullish on it. Give me like a good sentence or two, maybe some resources people should look into. Feel free to drop that stuff and get a conversation going down below. But I do want to let you guys know that we're also going to be doing a sponsored review here today talking about Artrade, which is another really interesting platform that kind of satisfies a different narrative that we've been discussing and hearing a lot of people talk about, which is not only the narrative of NFTs, but also the narrative of real world assets. As Artrade, it is aiming to massively disrupt the traditional art market that's $11 billion. So let's go ahead and dive into that review here. Alright everyone, so in today's sponsor review, I want to spend some time to talk about a cryptocurrency project that's at a major crossroads between two of the biggest emerging trends in the crypto space, real-world assets and NFTs. Today we're going to be talking about none other than Artrade. Now for those of you who are hearing about Artrade for the first time, Artrade is aiming to do something really big in the market of NFTs. Not only is Artrade aiming to build a marketplace similar to some other players out there that allows for artists across the globe from various different mediums to list their artwork and allow for people to purchase them built on the Solana network. But beyond that as well, Artrade is aiming to do something big by allowing you to not only have the digital asset, in this case, or the NFT tied to that art piece, but allows for that NFT to serve as a digital claim on the real physical artwork. This is, I think, a huge evolution in the NFT market because I think we're gone past the era of the PFP craze where people would speculate aimlessly on these random collections of NFTs. And I think the bigger focus here, especially with the narrative of real-world assets, is to focus on bringing some of the best quality artists into the world of digital collectibles where not only there is a real digital claim on that art piece that you can prove from your crypto wallet and in digital platforms and in the metaverse, but also having in the real physical world. It's the best of both worlds in my opinion. So I think that this is a really big evolution in the art space when it comes to digital collectibles, NFTs, and also real-world assets. Now, the big thing I want to talk about here is that unlike a lot of projects out there, Artrade is technically already live today. There's already a whole range of different listings for various different art mediums. You have various different people as well, like Leo Callard, who's a famous marble sculptor. You have Lionel Daly in this case, a major photographer, a whole range of different artists out there from various different mediums beyond just 2D art or the kind of range of digital collectibles that might have existed in previous NFT mediums. So this to me is really nice to see out the gate that there's already a range of artists. And as I was just kind of going through myself, I found a whole range of art pieces that I resonated with. I love seeing this kind of range of interesting art pieces, and it doesn't seem like there's one medium or format that is kind of being the pigeonhole focus here. It's not some broad NFT collection of 1,000 repeatable pieces. These are real art pieces out there that are actually at reasonable prices and allow you to support some of the greatest artists that you can see on the platform. However, the differentiating factor comes in the fact that you can arrange for a pickup or have the art piece delivered to your home. This to me solves a massive user experience issue for the NFT space, and I think also bridges it into a more mature market. I want to explain why I think this is. First off, on the topic of digital versus physical and which one's better. Look, I'm no doubt that there may be a chance that in the future we are all wearing some kind of AR or VR goggles or some kind of headwear, and along with that as well that the metaverse may be a continuing trend of development. But at the same time, what is present and real is that there is an $11 billion annual art market across the globe. And people love having physical art pieces and physical collectibles that they can show off to people, or they can at least just have because they enjoy it, love having it in their presence. And I think what's nice about Artrade is that it taps into both worlds. You can have the physical art piece, you can have the digital representation of that in various metaverse projects, and I think that that's really cool that it satisfies both ends. But beyond all of that as well, on a more business standpoint and practical standpoint, the thing about what Artrade is doing is that it's getting us out of the age of the PFP or profile picture craze of NFTs where there's 1,000 repeated collections of the same NFT with just different types of variations. In this case, it's real art pieces. It's tapping into a real established market and a whole range of people who have yet to be really brought into the crypto space, into the market of NFTs. And I think that satisfying a real platform of users and real use case on a market of over $11 billion of art annually is much more interesting to me than trying to get a project or into some business that's going to tap into some short-term craze for a couple of weeks that's unsustainable and eventually crashes. That's to me what the NFT space has struggled with. You look at CryptoKitties, you look at the craze back in 2020, 2021 with Bored Ape Yacht Club, and a lot of these different collections, none of them were really sustainable. In this case, this is actually supporting real artists. It's a real sustainable business model. And what's really cool is that there is a native token for the Artrade platform known as the ATR token. Now, the ATR token serves as a sort of hybrid utility and governance token for the Artrade platform. In the sense of utility token, it not only has staking rewards when you stake the ATR token, potentially earning up to 25% APY, but beyond that as well, there's also a built-in buyback system. So when the platform earns commissions from art sales and there's a broader general adoption of the platform, that's ideally going to benefit the token, as it's going to contract supply. But beyond that as well, there's also the governance aspect, and that's the Artrade DAO. Now, the Artrade DAO is obviously going to be engaged in marketing campaigns and help to fund further adoption of the platform. But beyond all that, they're also going to be working directly to buy certain art pieces from various artists to not only bring sustainable long-term artists onto the platform to build initial traction, but to really get the platform up and running and be able to sustain long-term growth over the long run. So I think that this is a really cool setup here and an actual good use of a DAO in this case to support artists, real world artists that are trying to break it into the digital art space and can help to really build a solid foundation for further adoption by a much wider crowd of participants. So there's a lot of things going on here within the project, and outside of that as well, they just launched the ATR token on MEXC. So this is a top 10 exchange in the crypto space by volume. So this is going to be really good for the ATR token, which again, over the past few years has really been kind of behind the scenes because the platform has been focused on building the protocol itself, building out this marketplace, getting things right. And now it's time where people are going to finally start discovering what Artrade has been building on. They're going to start figuring out all of the different artists and creators that are coming to the platform. And you can see here again that there has been a huge bump up in traction since back here at the start of the year. So I think it's high time to start looking for some of these plays in the NFT space, especially considering that they're still relatively small in the grand scheme of things when it comes to their valuation. But at the end of the day, I recommend you guys do your own due diligence. I recommend you guys go into the docs section, understand the actual business model around Artrade, take a look into some of the documentation we discussed earlier around the token itself and the DAO, and how everything sort of comes together. For me personally, Artrade is definitely going to be one I'm keeping on my radar here. We've talked about a couple similar projects in the past here that we're focused on because I do believe that the NFT market and digital art as a whole does have a place in the broader art market of $11 billion annually. I think that there is something there, and I think that there's going to be multiple protocols that benefit from this transition from the more speculative NFT craze towards real art in the crypto space that supports artists, allows artists to engage with their communities and be able to actually foster real creativity. So anyways, that's it for the review today, guys. I hope you all enjoyed it. If you did, consider dropping a like. It's a great way to support the channel. And let me know down below in the comments what you guys think about Artrade, as well as the other projects we talked about in today's video. I'd love to hear what you guys think, good or bad. I'd love to get your feedback and get a conversation going. I hope you guys have a fantastic day wherever you are, and I'll see you all in the next video. Take care, everyone.